Hello friends, stock market is a place of gambling. That is what most of the people in India think about the stock market. There is a reason for that. 99% of the people lose money in the stock market. We have heard stories of people going bankrupt by investing and losing money in the stock market. While we have also heard the stories of people becoming millionaires by investing in the stock market. Therefore, there is a perception that stock market is a place of luck and a kind of gamble which can destroy your wealth. However, reality is that the stock market is a place where you need to invest sensibly for the long term in fundamentally good stocks in order to create wealth. 99% of the people lose money in the stock market because they do very basic mistakes and do not follow rules of investing. So in this video, we are going to look at 8 common mistakes which people do that makes them destroy their wealth, so that it will help you to avoid these mistakes and save yourself from losing your money. Because Warren Buffett, the famous investor, told us that there are 2 rules of investing. First, don't lose money, and second, don't forget rule number 1. So let us look at these common 8 mistakes to avoid to not lose money in the stock market. Mistake number 1, doing daily trading and future and options trading. Large number of people involve themselves in day trading and lose huge amounts of money. Daily trading gives you profits for a few days and then a huge loss in another days, so you finally end up with a loss. Similarly, investing in futures and options also makes you to lose large chunks of money. In addition, these activities take a lot of your time. You have to track the market for the whole day, you have to depend on luck, you have to track the news and do so many things. So people with regular jobs cannot devote so much time for these activities and end up with a loss. Even people who do exclusively these things without any regular jobs also end up losing money. Yes, there are professionals and experts who earn huge profits doing daily trading and through futures and options, but for that you need to spend a lot of time and need number of years of experience, and still the percentage of people earning money by these techniques is very less. So why you should get involved in such activities where chances of success are very less? Instead, we should focus on long-term investing, which increases our chances of success many folds. Mistake number 2, speculating in the market and the stock prices. Large number of people speculate the market and the stock prices and invest accordingly. They do technical analysis and guess what is the direction of the market and how will the prices of stocks change. This kind of exercise is futile and worthless. Everybody wants to invest at the lowest prices and sell at the highest prices. But practically, it's not possible to do so. Nobody in this world, even greatest investor like Warren Buffett, can predict the market. So speculating the market, like how much low it can go or how particular stock prices will increase or decrease, is an activity we should stay away from. Yes, we can get a general trend of the stock market by news and macroeconomic factors, and we should definitely make use of that wisdom. But doing technical analysis and investing based on simply speculation should be completely avoided. So in summary, do not try to time the market. Mistake number 3, investing based on past returns. Large number of people select the stocks based on returns of past few months or years. They see that a stock has given multi-bagger returns in past few months or 1 or 2 years and invest blindly in that stock. However, just after investing, such stocks start to tumble and those people end up losing money. The problem here is that people do not understand the business of the company and just invest based on the past returns. If the stock has given good returns in the recent past, does not mean that it will also continue to do so in future. There may be several reasons for good returns in the recent past. If you don't do the fundamental analysis of the company, then you will never understand its true potential of success in future. In short term, price of any stock can increase. Any fundamentally weak stock can give good returns in short term. That is the nature of the stock market. But the problem is that if you don't know the fundamentals of the stock, and if you have invested simply based on good returns in recent past, then you don't know whether that performance will continue, and even if it does, you don't know when to get out of that stock. Therefore, you should not invest simply based on the returns of the recent past. Mistake number 4, investing based on the tips and others' opinions. Large number of people invest using the tips given by TV channels or stockbrokers or from friends and the people they know. Here, you should remember that all these stock recommendations given by brokers and TV channels are done to run their own business, and they have little interest or concern about the common people. Also, if you invest blindly on the basis of what your friends or people you know say, then you will end up investing in weak stocks and lose your money. You should always do your own fundamental analysis of the company, learn about the stock market yourself, and then invest in good stocks. If you do regular jobs and don't have time for all this study, then you should invest in good selected mutual funds, because in mutual funds, the job of selecting stocks is done by professional fund manager, where chances of losing money are much less. Mistake number 5. Taking loans for investing in stock market. Many people take loans in order to invest in stock market. This should be completely avoided. Investing in stock market on the basis of leverage is a sure short way to destruction of wealth. By taking loan, you have to pay huge interest, because such personal loans come at high rate of interest, and you have to get the returns of your investment to beat those interest rates. So it is such a demanding situation where you have to beat the interest rate, which means your stock selection should give such big returns. This is a complete no-no for beginners of the stock market. But even for experienced people, investing based on leverage doesn't make any sense, because you simply cannot bear the burden of such high amount of returns from your investments. Because stock market is a place where we should be able to bear the losses in short term. Warren Buffett once said that if you cannot see your portfolio lose at least 50% at some point of time, then stock market is not a place for you. Therefore, stock market is a place where we should only invest that amount of money which we don't need in short span of time. It is the only place for long-term investment and for our targets in the long term. Mistake number 6. Investing in penny stocks. Many people invest in penny stocks, means such stocks which have low prices and very small market cap, usually below 1000 crores. Such people think that the chances of returns from such stocks are great. For example, if the price of the stock is 10 rupees, they think that the stock is very cheap and they will get 100 shares in 1000 rupees. But you should remember that the number of stocks do not matter. It is the change in price of the stock that matters for returns. Also, such people think that 10 rupees stock is very cheap and how much more it can fall. But the reality is that it can still fall in price and get to 5 rupees with 50% loss. Sharp increase in prices of such stocks in a short span of time is very common. But you should always stay away from such penny stocks. Remember that increase in stock prices of such stocks can also be a result of operator activity, because chances of price manipulation by operators is very high in such penny stocks. Therefore, always avoid such penny stocks. Mistake number 7. Investing in bulk in bull market. Whenever there is a bull market, many investors invest all their savings seeing the euphoria in the stock market. They feel left out seeing the increase in stock prices and cannot contain their urge to invest in the market. They invest large amount of money in one go, and then stock market starts to fall because the market becomes overvalued in such a bull market. Therefore, you should not invest in bulk whenever there is a bull market, because if there is a bull market, then bear market will also follow. Therefore, it is always sensible to invest small amounts of money periodically in chosen stocks and not invest in bulk in one go. Mistake number 8. Concentration and over diversification. Many people invest too much money in one or two stocks which they feel confident about. This is called as portfolio concentration. No matter how much you confident are about the stock, if you invest all your money in only few stocks, then there are great chances of losing your money, because stock market is a place of uncertainty. So you should never rely on any single or few stocks. If a particular sector is doing well currently, in future that sector might get impacted by several parameters and events, and the entire sector might get in trouble. Therefore, concentration of portfolio is not good, and there needs to be good amount of diversification. At the same time, keeping too many stocks in portfolio makes it difficult to keep track of the stocks, and therefore you are not able to take right decisions regarding entry and exit of these stocks. Also, over diversification does not make any sense from the return point of view. Therefore, concentration as well as over diversification both should be avoided. So friends, I hope you liked this video and got some important knowledge. If you liked this video, don't forget to like and share this video, and do subscribe to my channel for more such knowledge. If you want to see this video in Hindi, then visit my Hindi channel, the link for which I have given in the description box. Remember, the mission of this channel is to spread the knowledge of investment and personal finance in easy and simple manner. So keep watching my channel and see you soon in the next video. Bye bye.